Hello, everyone. I am Miss T. Nicole Gibbs. I am here representing our Financial Fitness Friday. I'm going to share my screen so you guys can kind of follow along and not just hear me talk. I don't want to bore you with my voice, but want to kind of give you some strategies and some tips when it comes to your finances. So, first thing I want to say is welcome to another Financial Fitness Friday with ATL Insurance Chick. I am Nicole Gibbs, and the first thing I want to lead with is income does not determine wealth. Okay? Write that down. Income does not determine wealth. But before we start talking about financial fitness, I'm going to go ahead and give you a little bit about who I am and what I do. If you haven't been following me, I am the owner of T&G Insurance and Financial Services. My background includes banking operations and fraud investigations. I worked with State Farm for about 4 years, assisting clients with all things PNC and L&H. So I like to say PNC because, first of all, the test is not. First, I never thought I would be the insurance or financial girl. I never thought in a million years that would be me, but that's me. PNC basically stands for property and casualty. So I sold a lot of auto insurance, a lot of home insurance, small business insurance in the form of general liability, umbrella policies, commercial businesses, jewelry, boats, RVs, ATVs, renter's insurance. Anything that you can think of that is tangible, I actually provided insurance for with State Farm, and I still do independently. L&H is the side that I absolutely fell in love with. It's the life and health side. Life has basically a lot of little legs that can kind of take you in different directions when it comes to risk management. So on the life side, I help with mortgage protection, final expense, budgeting, financial, personal financial budgeting, and help with that. It also has kind of taken me down to Series 65. I'm actually studying for it now. At the end of this call, I'm going to at the end of this webinar, I'm going to provide you with some tips, give you some information on some stocks. I can't really sell them just yet, but I will be able to manage them once I receive my license for it. I'm super excited about that. So I've added yet another thing to do on my to-do list. So yeah, life and health basically is everything when it comes to preparation for your future self. And I fell in love with that. I started this business back in February of 2019 with my skill set and my experience. And I had a strong belief that personal finance is 20% knowledge and 80% behavior. So whenever you think about fitness, the reason I came up with different themes for each day of the week with this brand, because it's just easier to kind of, inform and provide content. So Friday, I had to find an F word, right? Friday is my favorite F word. So I had to find F words that made sense and that kind of correlated with the whole idea of financial fitness and Fridays or whatever. So that's how I came up with the name, long story short. And when you think about fitness and when you think about being fit, you think about discipline, you think about consistency, you think about doing something over and over and over and over and over and over again. So usually my comrade, Miss Barbara Heron, is here with me, but she's been having some technical difficulties with her computer. So she'll be back with us on next Friday. And I'm also trying to get a wellness coach to join us on Fridays. So just be on the lookout for, some empowerment and some information. So let's go ahead and jump right into it. So when we first started this whole Financial Fitness Friday, I'm looking for, let me see, it may be here. Let's see. Here we go. I think we're here. Get Fit. So when we first started, we started with Get Fit. And what Get Fit to me means when I hear that is it means that you need to create a budget. You need to know what is coming in and what is going out. That is what is called your expenses versus your income. It's also known as your assets versus your liability. And the way that you find out what your net worth is basically calculating your assets minus your liabilities, and that is your net worth. So that's basically whatever is left over. So getting fit basically means you sit down, you figure out a budget, you write a budget, and you figure out what you need to do when it comes to that budget. You have to prepare for your future self if you do not have a pension, if you do not have any type of retirement income, 401k or anything. If you're an entrepreneur like myself, you have to have certain strategies in place. So in the future, when it's time for you to retire, you'll have money that you can actually have outside of Social Security or anything like that. So get fit is basically finding that number and finding your net worth and what you could actually contribute to, what you could actually save, what type of strategy you could use to kind of build your future. That's basically what Get Fit is about. Now, Be Fit is about setting up that budget, tracking your spending, and saving it. It is the law of consistency. Once you've gotten fit, you wrote down your budget, you know what's coming in, you know what's going out, you know how much you can save, then you need to consistently do that every single time you get paid. If you get paid once a week, do it once a week. It's a burden. It took me literally 10 minutes to pay my cell phone bill online. I do not have auto draft. I do not like auto draft. So I keep a calendar of my bills and everything, and it took me 10 minutes to go ahead and take care of that. You have to carve that time out of your day and put it into your day so that you make sure that it happens. What I wanted to show you is there are some free budget templates that I think are really, really, really cool. Am I on? I'm going to come back to this, but I wanted to see if in Chrome I actually pulled up. There it goes. So millennialmoney.com actually has some really great online budgeting templates. Some of them are free. Some of them have like a trial. Mint has showed up in every single search while I was doing this research. That is a great resource for you to use. It tracks everything from your mileage to everything. A lot of people don't understand that with personal financial planning, before you can do stocks and bonds and before you can buy index policy or anything like that, you need to know how to budget your money. You can't be trying to invest and save money when you don't even know what your relationship with money is. I use that all the time because it's such a great analogy. Marian Lessington, the branch manager at Ameris Bank here in Atlanta, we actually host webinars on Monday with Kira Solomon called Money Lasting Strategies. And his favorite line is, you have to have a relationship with money. If you don't know what it is, or if it's horrible, if it's like, if you are that horrible boyfriend or horrible girlfriend to money, then it shows in your spending, it shows in your saving, and it's going to show in your future self if you don't kind of get on top of it. So personal financial planning basically starts with that budget. Personal Capital is one of the other platforms that a lot of people use to kind of budget everything because it calculates your portfolio, your retirement savings. If you are not as technology savvy and you want to just stick to a simple spreadsheet, you could do Microsoft Excel budget template where it kind of calculates everything for you in a pie graph and everything. A lot of banks actually have this tool already kind of integrated within their online banking system. However, it is always great to kind of just take the time out once a week, once every 2 weeks, once a month, however you get paid, write out your bills and figure out a way to track your spending and track what's going out. Once you've done that, what I like to explain to people is that hold on, I am trying. I always have a hard time with this iPad. Okay, I wanted to get back to this because I wanted to stay on track. You can set up a budget that tracks your spending and saving, as I showed you through Millennial Money. You could actually just do it on your PC. A lot of people don't understand that the first law of wealth is to keep a part of all you earn. So that means that you should save at least 10% of your income every time you get paid. What that means is putting $100 to the side could actually turn into $100,000 in 20 years if you put it in the right strategy that is going to benefit you in the future. I always tell my clients, I actually am contracted with Teachers Pension, and what we do is we are education consultants. We go around and we speak to the teachers about their life insurance and their retirement options, because a lot of times they don't know that they may have not been contributing to Social Security. They may not know that the money that their money is growing in, it's a variable situation, and depending on their age, they may not need to be as aggressive. So we actually come in as education consultants and kind of give them tools and strategies and help. We reallocate sometimes, we roll over, we remove and we replace, we edit, we do all of that for them. Just because a lot of times they just don't know. And I think a lot of times when you don't know, that's because the information hasn't either been presented to you, or you just don't know where to look for it, or you just don't know where to start. So starting with that budget and keeping consistent with that budget is what you want to do. When it comes to saving at least 10% of your income, you got to set goals for yourself. A lot of people think that, okay, now I got a budget. What do I do now? When you prepare and execute a plan based on your budget, you are actually looking at how you can incorporate your personal goals. So your personal goals may be, I want to have $50,000 saved by the end of 5 years, or I want to be able to deposit $8,500 a year for 5 years in a growth mutual fund with an annual return of 8%. Goals may change over time in your place and the life cycle and how life happens, because life is just kind of like the stock market. It goes up, it comes down, it goes up, it comes down. But marriage and planning for children and college and all of those things need to be planned. It shouldn't just happen. It should be planned. So that is basically Be Fit. That's what we talked about. Now, this week, we're going to talk about staying fit. Okay, so staying fit is basically the segue from being fit. That last third bullet point, protect your future with life insurance. A lot of people think that life insurance agents such as myself, we're just trying to sell something to you. We're just trying to get a commission, when clearly that is just not the case, guys. Life insurance agents are here to help you not only transfer generational wealth to your beneficiary or to your loved ones. It also is a peace of mind, an ease of mind. The things that we neglect, such as life insurance for cell phone insurance, or for food, or for wherever you spend your money, where you can kind of reallocate some of that money towards life insurance, is great. And the thing about life insurance now is you do not have to die to use it. There's this huge misconception that if you buy life insurance, it's for somebody else to live off of your money. And who wouldn't want to do that for? Who wouldn't want to buy money so that your family could live off of it when you pass away and you can't help them anymore? So a lot of misconception is around the whole living benefits situation. The CDC has proven, just like in this actual average life expectancy chart up here, that people are living until they're about 86 years old now. We are in the age of information, and what that means is information is right at our fingertips. You literally can click on a video and have access to information that you usually or before in the past would have to either get through a textbook, a professor, a teacher. Now it's right here on the internet. So people are more conscious of their health and being fit and making sure that they live long so they can be an heir to or provide a legacy to their children's children. I mean, they say a just man leaves enough for his family and leaves a legacy for it to live as long as it could. I know everybody has been kind of glued to the TVs while on lockdown, and Netflix has definitely been a great pastime and a great pleasure. And Madam C.J. Walker, actually, her story, it's an inspired story by her story, but for the most part, you see that her legacy still lives. This is 2020. She lived back in the early 1900s, and she was a self-made millionaire. So if she could do it almost 100 years ago, 120 years ago, and we're still talking about her today, that's what being financially fit is all about. So anyway, didn't want to go down that road, but yeah, living benefits, life insurance is something that you should consider. It is a situation where you think about real estate. Real estate actually, when you purchase a home, the equity in the home grows. If you choose a great location, the market is good, time is on your side, equity builds in the home. It's the same thing with the life insurance, except that the money that is building in the policy is tax-free. If you ever need the money, you could use it. So a lot of people use that strategy for mortgage protection option. They also use it for college savings. There's just different ways you could kind of figure out how to play this game called life, right? So when you're making sure you're financially fit, it means that you are preparing for the future. One of the things that we talked about in our Money Lasting Strategies webinar is something that I wanted to kind of bring over to today, and that was your stimulus check. A lot of people have their stimulus check, and one of the real estate gurus, also she is a venture capitalist, Barbara Cochran, had an interview with TMZ, and they basically was just talking about, what people should do with that money. And one of the first things she said was to pay your bills. She said that if you're not fortunate enough to have immediate use to the government money to feed your family, and you're in a better situation, that's one thing. But if you're not, you need to use that stimulus cash to improve your current financial situation. In layman's terms, that means pay your bills, okay? The second advice that I think a lot of people in the banking and financing industry is saying, pay down your high interest credit cards, because when you do that, number one, you're protecting your credit. Number two, you're reallocating money to an emergency saving situation, and you don't have a bill that's due. If you continue to allow a credit card to stay open, not open, but what I mean is if you could a revolving credit card with a high balance on it, that's a bill every month. So one way to eliminate that is taking that stimulus money. If you're still working, 50% of the world is working, 50% of the world is not. If you're part of that 50% and you got a stimulus check and you're still working, that's extra. So with that extra, you need to pay off your credit card bills because you owe it anyway. The last thing a lot of people are talking about is the options that are given by employers versus unemployment. Count the costs. There is a lot of people that are saying that if you take the money from your job, if you're off, so I'm talking to the 50% that's off, the 50% of people that are not working, not our essential workers or grocery store workers or people that kind of service what we buy as far as products are concerned, the people that are not working, there's an opportunity for you to get unemployment, and there's also an opportunity for you to get money from your employer. Now, if your employer is only offering 8 weeks of severance or some type of stipend to kind of, balance you out, you really need to count the cost. You need to decide if you should go the unemployment route versus that route, because your unemployment will last for as long as however you've been working. So based on how much you kind of put into that system, that's how much you get out. So you may have a year worth of unemployment money that is insurance money that has just been sitting there for this particular time, or a time as this. Count the cost before you decide to take 8 weeks worth of pay from your employer versus whatever your unemployment is. Think about that. Another thing that Barbara talked about is the budget, like we've been talking about. I beat that horse down and she is completely just done with me talking about this. That budget is important. The budget is important because it gives you a number. And that's one of the main reasons why I like to talk about that. Lastly, before we are done, I think that's everything I kind of wanted to tell you guys. Budget, staying fit, it means doing something over and over and over. Make sure that you are consistent with your efforts and your discipline. Remember that income does not determine wealth. One of the other things I want you to remember is the first law of wealth is to keep a part of all you earn. Save at least 10% of your income. I hope that these financial Fitness Friday tips are beneficial and that you can actually use them. I am Nicole Gibbs, ATL Insurance Chick. I'm basically done. I was searching for words to say, but I said everything that I had to say. I hope this information helps you. As a insurance and financial services consultant, I can help you with anything. Quotes are always complimentary and are free. You can give me a call at 770-771-8538, or you can find me online at ATL Insurance Chick. And I'll see you online. Remember to get fit, be fit, and stay fit.